We'll, of course, be talking about Netflix today with our lead market technician, Rick Ducat, who's here with us in studio. And Rick, Netflix getting a big boost today, but in terms of how they're performing more broadly against the sector and the markets, I can see sort of how it looks, but, tell us what the technicals are telling us.
Yeah, handily outperforming the broader sector, communications sector that it's in, as well as the S&P 500, up about almost 70% at this point during the past year. When we look at the streaming sector, though, this one's a bit trickier to kind of analyze here because on one hand, we have the whole Paramount and Warner Brothers deal. There's reports that Paramount would be looking to acquire Warner Brothers. That throws things off a little bit here. But you also have these companies like Disney and Comcast. Disney is ABC and Disney Plus and Hulu. Comcast is NBC. They own so many other things. Comcast is a whole telecom business. They also own the Philadelphia Flyers. I didn't know that. But, that's like a whole other thing here. So it's kind of tricky to compare them to. And unfortunately for bulls, the movie that is Netflix stock kicked off this month to major boos from a very prominent critic, which is Elon Musk. He was calling for his followers on X to cancel their subscriptions. Shares did decline a little bit, and that's where we're getting that bounce from. But really, though, you can see that kind of everything was going down at the same time. It's really easy to just say, oh, this is why this is going down here. But, there was a price target cut from Goldman Sachs the day before. President Trump the day before that posted about 100% tariff on movies outside America. So obviously not very good news for Netflix either here. So and also it was the first of the month. New quarter, new month, rebalancing. Maybe it was just something as simple as that here. But many reasons these things can happen. Avoid simple explanations.
Yeah, and as you look, down 4% on the month. So not a huge move to the downside, but still up 37% over the last 6 months, which you can see obviously clearly here as you've moved us to the one-year chart. As far as its longer term look, what is some of this indicating to you?
Symmetrical triangle type pattern here with our high point being around 1341, our low point being over here near 1105, then converging toward each other. We did have this downward excursion here where we retested previous lows near 1150 at our green line here. But we have gotten a bounce. We have pushed beyond the boundaries of our falling wedge type shape here in white. That was the more short-term pattern here. We're back within our more triangular pattern. Now the bulls would have their sights set on 1230. That was our range high, while the bears might be looking for a retest of that 1150 level. If we were to look at some of our other studies here, a zoomed-in look of our same yearly chart, RSI shows that this momentum indicator has yet to reclaim the 50 midline that separates bearish from bullish activity. It also hasn't crossed above that trend line either here. So that would be something the bulls would want to see. Notice as well, for now, we're stuck at the confluence of two of our moving averages, yellow 21-day, orange 63-day exponential moving averages, right in line with our volume profile point of control. All that comes together near that 1200 level. That is a key level for shares to overtake to finish this upside move and break out of this volume congestion area.
And I want to talk about those price targets that we saw today. Right now trading 1191. The price target we got from Seaport that I mentioned, considerably higher than that, would be a new all-time high. But that wasn't the only price target adjustment that they saw today as well.
Yeah, there was also a TD Cowen price target down, actually, 1425 from 1450. They did keep a buy, but kind of confusingly, even before that, the day before, Citi, October 3rd, not the day before, Citi price target up to 1295 from 1280, kept their neutral rating. So kind of a mixed bag here, once again, kind of a difficult sector to make sense of at this time here. Long-term look, though, if we zoom out, kind of take out some of the noise, you can see this big volume area that we were just talking about really stands out. We are also right at the confluence of our long-term simple moving averages, 13-week and 26-week, 1 and 2 quarters worth of activity here. So that comes in right around that 1200 level once again. So really a key threshold to overtake.
And as far as options activity that we're seeing on Netflix today, was it pretty standard volume-wise? Were the reports enough for it to have a little bit of a boost?
The sizzle was a tiny bit below average, so really not too far out of line with what you might expect here. Expected move for October 17th, 10-day trading days out, 4.3%. So to the downside, lining up fairly closely with that 1150 level we talked about here and our -1 standard deviation channel. But to the upside here, it's a bit beyond that range high and in our trend line here. So that comes in around 1243. So those levels kind of stand out as well because they line up with some of our other factors here. One interesting trade I saw, two done as a spread at the same time, both long puts though, both bearish opening trades, plus 949 October 17th, 1125 puts, and the same of 1135 puts as well here. So about a $1.14 million debit, which is the max loss. It needs a bigger than expected move during that time. It would need to get down to about 1123, so all the way down here to this level to start making money outside the expected move area.
Yeah, and significantly lower than the action we saw from the analyst community today with their new price targets, even the one that was slightly lowered, with significant moves to the upside needed to get near those price targets. But Rick, we appreciate you being with us for Options Corner, breaking everything down for us.